GME is one of those meme stocks that had an explosive rally in early 2021. We went from $9 to 509 in seemingly blink of an eye. Ever since, we've had subsequent base melting crashes and other explosive rallies. Not quite as violent as the first one, but they've been happening pretty regularly. It's not the most predictable pattern. Those at Reddit may disagree with me, but they do seem to follow Fibonacci sequences, and we do seem to have impulsive upward structures followed by choppy corrective pullbacks. That's a good thing. I'm interpreting this whole thing as a series of nested 1-2-1-2 Elliott Wave structures. And if that's the case, we've got some wave threes that we are due to get into real soon. If we have a wave three shaping up right now, we're sitting at $210. We should be looking at $541 to $660 next. That's what this purple box up here is for. That would be the top of a larger third wave. Now, this number is again projected off this latest 1-2 structure, this Fibonacci extension. However, there's confluence across all of the rally structures that we've had thus far, including this bigger 1-2 and this even larger 1-2 here. So we've had big 1-2s with higher lows, higher lows, higher lows. That's 3 times it's happened. Again, we're due for a third wave. You also have to take note that while we expect a 546 to 654 target up ahead, up above, there is strong resistance at 535 based on our big picture. But when that fuse is lit, that rocket is going to take off real quick. At the same time, you have to remember when that fuel runs out, we're going to be crash landing. There's plenty of precedent for that happening in the previous rallies. If you're trying to get into GME, be careful. You can start accumulating. You may already hold some. You can keep buying. If you're doing leverage, options, borrowing, whatever it is, if you're leveraging, make sure you wait for this 1-2 to happen. So we got this smaller 1-2 setup. We had an explosive rally today. Should get us up into as high as 284, maybe no higher than 231, somewhere in that range. Should have a pullback. It'll be quick and short-lived, maybe scary. That would be the time to buy some leverage positions, but we should not see nasty pullbacks. If this truly is a third wave, any pullbacks should be short-lived and they should not go too deep. I'll extend that to invalidation. Again, we should not see nasty pullbacks during wave three. If we get anywhere near this red line, this pattern is bust. Doesn't mean we can't rally later, but this immediate setup I have is not going to last. So again, this red line at 140, 144-ish is key. If you're leveraged, especially, you want to cut your losses. Don't hodl this. You know, holding the stock is one thing, but an option or a leverage position will get you absolutely killed. Ask me how I know. Again, just a reminder, this is going to move really fast. The rally may come and go before you know it. So pick your poison. You don't have to play this. It's a very high risk move. But until next time, thank you for watching and happy trading.